streaming. Okay. All right. Good morning. We are sorry for the delay because of we have an issue with the technology until we got it cleared. We will continue with, or today is the 28th. Just a reminder that tomorrow is the last day for Accounting 1. And since we are going over chapter 13, and this chapter can be used for both Accounting 1 and Accounting 2. So in a way, we are not going beyond our boundaries in Accounting 1. So this chapter 13 is a financial accounting, and Accounting 1 is a financial accounting. So chapter 13, like I mentioned earlier a couple of times, it can be used for both Accounting 1 and Accounting 2. All right, we are almost done with chapter 13. We are doing the accounting portion. We were through with the theoretical portion, and now we go to page chapter 13. We did the dividends. We're going to do a stock dividends. All right. And that's the one that we need to start. We did the cash dividend. So the accounting that applies to stock dividend is the same way that is done with cash dividends. There are 3 dates of 3 days: declaration date, date of record, and the payment date. All right. When we do a stock dividends, nothing is going out of the corporation. Nothing out. Nothing. No money is going. No cash is going out. No other assets is going out, because we are taking it out of one section and we're putting it into another section. So we're taking out of retained earnings and we're putting it into the contribution capital. So the stockholders' equity does not change. Not like cash. When you give cash dividends, your assets are going to be smaller. All right. So all right, let's see how it works. We're going to start with the example on page 513. Page 513. All right, the transactions on February 24. Let me go to. That's all right. We'll just. Let me see. Let's go to Excel. I think that will be a little bit helpful to the ones who are observing the one online. Yeah. On February 24, when the market price of Wings $5 par value common stock is $20, so the market value is $20 per share. The board of directors declared 10% stock dividend, 10% stock dividends to be distributed on March 31st to stockholders of record on March 15th. So the declaration date is when? On February 24.
Yeah.
That's the declaration date. The date of record is when?
March 15th.
And the payment date? March 31st. Yeah. So how do we do? What is the amount of dividends in this case? What is the amount of dividends in this case? We're going to say, you look at the stockholders' equity before it, this section. Okay, look at that section. How many shares we have issued and outstanding?
15,000.
15,000 shares. And so what is the percentage of shares given?
10%.
So 15,000 times 10 is what? 1,500?
You said 1,500 times 10?
No, 15,000 times 10%.
1,500.
1,500.
All right, so 15,000 times 10%. That's equal to 1,500. These are the shares that are given as a dividends. 1,500 shares. Okay. All right. So, but in terms of cash, if we were to assign a value for cash, should we use the par value or the market value to determine the amount of cash for this stock dividends? We will use the market value. So what was the market value?
$20.
So we're going to say 1,500 times $20, and that gives us what? $30,000. All right, now we figure out how many shares that are given and what's their value. So on the declaration date, what do we do? On the declaration date, we're going to debit on the declaration date, which is February 24, correct? February 24. All right. We're going to debit stock dividends now. Stock dividends declared. Stock dividends declared for how much? For 30,000. How did we get the 30,000? Yes, sir. All right. The 10% stock dividends times
The
shares outstanding times the market value. That gives us $30,000. Let me make this a little bit nicer. F2. Stock dividends. All right, and so we're going to credit. What do we credit? Immediately, we credit common stock distributable. Common stock distributable. How much? We have 1,500 shares times the par value, which is $5. So 1,500 times 5 is what?
7,500.
7,500. And the balance is, what do we call it?
Additional PIC.
Yes, sir. Additional
Paid in capital.
paid in capital, yeah. Additional PIC for 22,500.
Yep.
22,500. All right. This is, why do we say distributable? This is what you're going to distribute to the shareholders. That's why it's called distributable. So that's on the date of record. Nothing, no journal entry. All what we do is a memorandum on the date of record. All right, on the payment date, which is what?
March 31st.
March 31st. March 31st. That's the payment date. Payment date. All right, what do we debit? What do we credit? We're going to be interested in the common stock distributable. You see the 1500 shares. So that's what we're going to do. The 1500 shares times 5 par value. Yeah. So we're going to debit common stock distributable. Debit common stock distributable, because it's no longer distributable now. We're going to get rid of that. And what we're going to credit? 7,500. And we're going to credit common stock. Now that means they are officially.
How you gonna debit?
Yeah. Going to credit common stock for 7,500. All right. So now they are officially extra shares, and they're going to go into which section of stockholders' equity? They're going to go to contributed capital. So the contributed capital is going to increase a little bit. The total stockholders' equity will not increase though, stays the same. But retained earnings will go down a little bit because it's taken out of retained earnings. So it's taken out from retained earnings, you put it into contributed capital. All right. So compare. Look at the. Go back to this page. Look at this for a second, the components, and then look at this one after the stock dividends. Compare. Look at how much retained earning was at the beginning. 450,000, correct?
Yes, sir.
On the new one, it is.
420,000.
Is it the same? No, it's down by
30,000.
30,000. And look at contributed capital. At the beginning, it was 90,000, correct? At the beginning.
Yeah.
And after that, it is 120,000. So the retained earnings went down by 30,000. That's the value of those shares. The market value of those shares, yeah. And then if you take it out of retained earnings, you put it into,
Contributed.
yeah. So the total does not change. Contributed capital increase, retained earnings decrease, but the total still the same, yeah. Okay. Now we have the next issue is stock split. Okay, on page 515. Do we have to do a journal entry for stock split? We don't. Okay, you just update your stockholders' equity. If you split each one common share for 2, then the par value is going to be half of the original amount, and the number of shares, outstanding common shares, will double. So if you look at the original one, well, after the look at the one after the dividends, stock dividends. This one here. Look at this one for a second. How many shares we have outstanding now? How many common shares we have outstanding?
15.
15,000. If we split each into 2, then we will have
7,500.
no. If we split each one into 2, we'll have 30,000 shares. Yeah. So,
Oh, yeah, I get. Nah,
Yeah,
I
yeah,
tell you.
yeah.
and the par value become 2.5.
2.5.
Yeah. So the total does not change, except the number of shares will increase. The par value goes down, but the total is still the same. Yeah. It's just like imagine you have $1 and you put it into 10 dimes, or you put it in nickels. Still, you're gonna have 20 nickels or 10 dimes. It's still gonna be a $10. You say $10 or $1? $1. Yeah. Dollar, yeah. Still $1. If you put it in pennies, you still have 100 pennies, but still $1. Same thing with the number of shares. We have 15,000 shares. If you split each into 2, then we have 30,000 shares, and the par value become 2.5. Yeah. All right. So 2.5 times 30 is still what? Whatever that amount comes to. Yeah. Okay. And last time we mentioned, yes, look at the, this, look at the after stock split. Look at this for a second.
Sorry.
Hey, it's all right, come on in there. Let me get you test one.
Test one?
Yeah,
Okay.
I gave you second one, correct, yesterday.
The final?
Yeah.
Yeah, you sent it to me.
Yeah, and let me give you one. Oh, I have it here. So I need those if, before you leave today.
Okay, that's fine.
Yeah.
I mean,
Yeah, before you leave today,
you know, it's what I have today, so it's fine.
that's going to help you tremendously if you do those. Yeah, you may pass. Let me have the my homework.
Okay.
You said you had it. Are you planning on doing in 2?
Accounting two?
Yeah, in the summer 2?
I think I got, no, summer two?
Yeah.
I didn't apply for it, but if I have to, I mean, I
It's
will.
up to you, you know. Yeah, it's available. And
Do I just do it through you?
you go to the registrar's office,
Okay,
but you have to clear it with your financial aid.
okay,
If you're planning on getting financial aid, yeah.
okay.
Yeah, if you have it in writing, I'll take it in writing.
I'll take it in writing.
Yeah,
Okay.
and hand it to me. Okay, so look at this: the before the split and after the split. It's the same one that we were looking at. So the number of shares, it was 15,000, correct? Now on the after the split, it is 30,000. See that? The par value was 5, and now it is 250. Yeah. The total is still the same, no change. Total contributed capital is still the same, no change. Yeah. Okay. I think this is all the what I need from this chapter. We have a project that we need to do.
Project?
Yes, sir. Yeah, big project. We need to do a ratio analysis. When we come to that, after the next chapter is going to be bonds,
Okay.
and then after the bonds is the statement of cash flows. I think. Let me see. Long after the bonds is going to be cash flows, and chapter 16. Yeah, chapter 16 is easy. I'm going to bring us the financial statements. I'll see if I can get everyone financial statements, and we need to analyze. That's the project. Analyze that financial statement, and then you got to prepare it on a PowerPoint. And we may just give you 2 minutes just to go through your PowerPoint as a presentation. Yeah. This is a project is required for accounting too. Yeah. Okay, it's required for accounting too. All right. I don't have any. I did not make any exercises. Did not choose any exercises today for us to practice. But by the grace of God, on Monday, I will have a set of. Yes, sir.
I'm not gonna be here all next week.
That's fine. You're just gonna listen to
Yeah,
them.
I'm gonna listen.
Yeah.
I'm gonna wake up
The
at the same
presentation.
time and still listen though.
Yeah. Just make sure you clear today
Yes, sir.
before you leave. Yeah.
About to go right
Yeah.
now.
You both of you go in. Don't leave the office until you clear it. Yeah. And Reverend Darren, you are okay. You clear because you are current. Yeah. And those two hoodlums are not clear. Yeah. Those two hoodlums not clear. Yeah, just sorry for that. You know, I don't mean it. I don't mean a word of it. Yeah. All right, let me stop streaming. That's all what we did today, 20 minutes, but we're through with this chapter. All right.